Welcome to the virtual Roadshow series presented by Channel Check. This Roadshow features Justin Dye, CEO, and Nancy Huber, CFO of Schwazze, OTC ticker symbol SHWZ. Following a formal presentation, they are joined by Joe Gomes, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed, SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on Schwazze on channelcheck.com or by clicking the link in the description. With that, I am pleased to present Justin and Nancy.
So Schwazze has a very deep regional focus where we operate in Colorado and in New Mexico. We are vertically integrated, which means from growing cannabis all the way through to selling it to the consumer at retail and via e-commerce. Part of the company strategy is to be very strong, taking care of our consumer customer at retail, as well as having a robust wholesale business where we sell to other dispensaries, all wrapped with a house of brands where we're launching brands for products as well as retail banners. Next slide, please. So if you look at the business today, we're 33 stores, 23 of those in Colorado, 10 of those in New Mexico. We have 150,000 square feet of indoor growing capabilities and 35 acres of outdoor. And we also have 60,000 feet of hoop houses that we continue to grow. And we're adding more to those hoop houses as we speak today. Manufacturing, we have two campuses, one in Albuquerque and then one in Pueblo with about 13,000 square feet of space. And our wholesale business is powered by Purple Bees, our brand there. And then also we have a premier distillate brand that is consumer facing that we are in all 33 of our stores today, as well as approaching 70 stores in Colorado. Our Green Leaf is our banner in New Mexico. That's the store banner. STARBUDS and Emerald Fields are our two retail banners here in Colorado that we're very proud of. And then Grow Forth Gardens is our cultivation portfolio of grows. And we're headquartered in Denver, and we also have our division offices in Albuquerque. Cannabis today is, we continue to see great momentum. We have 18 states where cannabis is recreationally legal and more so coming. 45% of the United States population resides in states where you have recreational that's legal in those states. And if you look at number of uses, 18% annually and 11% of the population on a monthly basis. So socially, it's becoming more mainstream, and we think the genie is out of the bottle, and we will be seeing cannabis throughout the country. And we believe it'll be on a state-by-state basis for some time. And obviously, there's a lot of activity at the federal level from a lobbying perspective to be able to bring medicine and be able to bring cannabis to patients and customers across the country. And we remain hopeful and optimistic about that. Timing of when we will get safe banking or federal descheduling is up in the air, but we continue to monitor that and are hopeful and optimistic about that. Next slide, please. Our strategy. So our strategy we developed back in early 2019 was really a retail forward strategy where we wanted to operate retail dispensaries that stood for great assortment, high quality products, terrific service, and very warm and inviting stores. And being able to provide, for instance, in some of our stores in Colorado, we offer up to 60 different SKU sets of cannabis on the flower side, and we offer a number of facings for edibles and pre-rolls, et cetera. So we stand for the widest selection. We certainly want to run lean operations. So on the supply chain side, continue to drive quality as well as productivity to continue to make our operations very efficient and really leading from a cost structure perspective. We're developing product brands internally, as well as partnering with great brands. For instance, we partnered with Lowell Farms here in Colorado for pre-rolls, and we also have our Purple Bees vape cartridge line here, and there'll be more to come there. But we think there's a great opportunity to partner with existing brands as well as developing some of our own. And retail is where brands are established, getting those facings and creating trial and awareness with the consumer. That's why retail is so important. And then, of course, we want to measure what's important and continue to manage against that. So we are data driven, and we have a fully integrated ERP system, one point of sale for all of our stores, and it goes into our data warehouse where we certainly can measure performance and evaluate trends with our customers, both on the wholesale side and consumer side. Going deep and why it matters, we really believe in focus and building a really strong network of stores and house of brands in the states where we operate. It creates awareness with our brands, with the consumer, allows us to be more efficient in getting product developed into the stores and sold, as well as it allows us to really focus on the wholesale business and solve problems for our customers, dispensaries, as well as our distillate manufacturers and edible manufacturers that we service every day. So being focused, driving great service, really working on high quality items, and being there to solve problems for consumers as well as our B2B customers is really what it's about. And that focus and getting the shelf space at store level we think is very, very important. Next slide. Building our house of brands, we covered that. Purple Bees, we have about 30% market share on the distillate side today. Growth Forth Gardens, we have 3 grows today, which is our premium growing locations and dispensaries where we will grow our own product and flower and support stores, as well as sell that via wholesale to a number of dispensaries here in the state. STARBUDS, we have 17 dispensaries here, which is one of the leading brands in the United States. We also have a CANNABIS, which is under the banner of Emerald Fields. We have 2 dispensaries today, with 2 coming online. And then we operate the Our Greenleaf banner down in New Mexico, and we have some of our product brands are under Our Greenleaf and Purple Bees in New Mexico. And we'll continue to look at opportunities to partner with CPG brands and flower brands, as well as develop our own to really offer the widest selection for our customers. Growth, New Mexico, it was a logical adjacent market for Colorado. We're the leading vertically integrated cannabis company in Colorado. We really like the New Mexico market. We know it well from a real estate perspective. And Our Greenleaf, we really believe is the top premium retailer there, and hoping to build on the team's success there and continue to open stores and look at ways to grow there on the retail side. And then we have growing, we'll be close to 90,000 square feet of cultivation in New Mexico, where we're growing really high-end craft flower for our stores and for the market. And then we have a manufacturing facility where we'll produce both distillate as well as products for our stores. Next slide. So when you look at the regional footprint, there's a lot of synergies from a management perspective, best practice sharing between Colorado and New Mexico. Despite each state operates as its own ecosystem with different laws, and you have different setback requirements by jurisdiction in New Mexico, as well as in Colorado as we're looking to grow our portfolio. And I think the real important piece here is that we have a lot of growth and white space to continue to grow, both in Colorado and New Mexico. And you can see Colorado's a much larger market than New Mexico today, but we believe New Mexico is going to be a faster growing market than than the sophisticated Colorado market. And just put it into perspective, Colorado's about $2.5 billion total addressable market, where New Mexico is between 200 and 300. With the launch of recreational sales April the 1st of this year, we believe the New Mexico market is going to be continuing to grow very, very rapidly as we sell more medicine and product to patients and customers alike in New Mexico. Next slide. Why brands matter. We believe having really strong banners for our stores and having brand equity and mind share with customers is very important, as well as on the product side. And you can see this is a little bit dated, where our market cap was about 300 million and trading about 7.6 times 2022 adjusted EBITDA. And then you can see how the branded companies with really great brands, great products, trade in the mid-teens to 20s. And we think that's the opportunity here with a company like Schwazze, where today we are not trading at those multiples, and we continue to grow our business and build a really strong, foundationally solid business with great retail, great supply chain operations, efficient operations, and continue to have innovation with products that's a winning combination. And over time, we believe we will trade at multiples very similar to this, but we think certainly there will need to be a catalyst, safe banking and perhaps even some capital markets provision to be able to be listed at on the NASDAQ or New York Stock Exchange. So that's what we're playing for. Next slide. Building successful brands. The team has done a really nice job, and we've got some case studies here. This is where we're working with a supplier partner that had a branded product that we sell at retail, where that company partnered with us from a promotional perspective and really put a lot of marketing and merchandising and really leaned in and worked with us. And we were able to take their market share back in 2021 from 15% up to 40% in January this year. And where we had, another supplier that really didn't lean in and was comfortable with where they were, they fell off. And this speaks to the power of having shelf space at retail and being able to create brands there and create loyalty and really drive customer awareness. So we think retail is absolutely important and it's really critical in doing that. And you can see this here, how we can promote brands with our retail footprint. Next slide. Brand building success. You can see Purple Bees, where we've been able to take this as a percentage of the category, our own Purple Bees brand that is really positioned to be a high quality at a good value, everyday price brand. And we've been able to take that from 13% of the category with promotion. We got up to 27%. It's settled first quarter in the 20s, but the ability to launch products with great margin profiles that really answer the customer's needs and fill a gap in what they're looking for. We've been able to do that with our Purple Bees brand of vape cartridges. Next slide. Manufacturing output. You can see that the team has done a nice job of continuing to work on manufacturing output and becoming much more productive, while also focusing on the highest quality distillate in the state, and have been able to grow that 189% over the last year and a half. And we continue to see that, and the team's done a good job of really working on manufacturing and distribution and working with our wholesale customers there. playbook. So at retail, case study of taking gross margins. We bought MESA Organics back in 2020 and have been able to really grow their gross margin rate 370%. It's stuck while also growing sales. And we think that's a tribute to our ability to merchandise, market, promote, and it's really resonating with customers. So it's rare in retail, my experience, where you're growing and you're expanding margin, which the team has been able to do that. And that's really a tribute to what we stand for at retail. Next slide. And then as we bought the 13 stores at STARBUDS here in Colorado, where we have the unique license here to operate in Colorado, we've been able to take their gross margins up as well by becoming more efficient. Really it starts with merchandising and store operations to drive gross margin. You can see we've improved 490 basis points there. So I think having a track record of partnering and buying companies and being able to grow and take best practices and take what's working with those and applying to other stores and other operations is really a strength of ours. And STARBUDS was a very well operated business, and we've been able to drive scale and better margins and grow the business there. So we think that's a really great case study with regards to our retail prowess. Next slide. Working on costs. So in this environment particularly, it's important to continue to be as lean and as efficient as possible. This is an example where we've had a 2% reduction in cost of goods sold and been able to, on a percentage basis of COGS, really make a difference with buying more efficiently and making deliveries more efficient, as well as buying with scale. And we see this will continue as we partner with our supply partners to move more cases and more units for them, while getting a price reduction for us. And it's a win-win for our suppliers as well as Schwazze. And then I think we have an outstanding team. Nancy has been a bedrock for us in finance and has been with us almost 3 years. Todd Williams has been with Schwazze for 3 years and heads up M&A strategy and real estate. Narup Krishnamurthy runs operations and the day-to-day P&Ls, which would be wholesale, retail, both in New Mexico and in Colorado. And he has a very talented team that works with him that runs retail and wholesale. And then Dan Pabon, who was one of the architects of really the regulations here in Colorado and has really great respect in New Mexico as well, and has been able to help us from a legal perspective and licensing perspective. And it's a compliance business, and we treat it very, very seriously. And Dan's brought a lot of that to the table for us. Next slide. Making a difference. This is a great business. This is a business where you can have a purpose and create a really valuable business and take care of consumers and patients, but also give back to our communities and our states. And looking at more environmentally friendly packaging is something that we're excited about. Driving quality, making a difference here locally with hiring and creating jobs and volunteering at the food bank here. That we had a team go down to make a difference from Schwazze, and supporting some of the fires both in New Mexico and Colorado. So this is one where being a part of the community is all day our responsibility, and we enjoy doing it. So not only with dollars, but also with our talents and time as well, in making a difference and sticking up for those communities that we serve. Next slide. I'll turn it over to Nancy.
Yeah, thanks, Justin. Current capital structure, we have about 53.5 million shares outstanding as of the end of Q1. Total preferred shares were about 80.5. and warrants and options netted to 4.6 for a total outstanding share count of 138.2. You can see the debt structure as well listed below that. Total debt is about 174 million. With the cash, net debt was about 122 million. And you can see kind of our multiples over on the side to give you an idea of where we believe those fall. In terms of how that relates to others, and again, like the previous slide with multiples, this is slightly older data. We'll update them at the end of Q2, but relatively the numbers stack up the same, which show that we're still a rising industry leader trading at a discount. We do believe there's opportunity for expansion in our stock price and believe it's a very good investment at this point. And then just a little bit about the Q1 performance. Again, 31.8 million in revenues compared to last year, so a nice growth pattern. Continue to do M&A acquisitions, and we'll do that throughout the year for expansion there as well. In Q1, we only had the acquisitions that we did acquire, which were 4 of them in the quarter, ended up putting in revenue for us through about half of February and all of March. So again, Q1 has still got opportunity for growth in Q2, given that many of those acquisitions weren't reported for the full quarter. And then you can see our adjusted EBITDA is still a very healthy, almost 25% of revenue. And our focus as we move through the year, this is based on the 2020 analyst consensus, 2022 analyst consensus. You can see we're still looking at a healthy growth pattern of at least 67% revenue, and expect our EBITDA margin to still be, pretty close to 30% at the end of the year, with expansion in gross margin as well. So I think we have a pretty rosy picture in terms of performance compared to some of our competitors, and expect to have good results through the rest of the year.
And we're passionate about this industry. Our team members are passionate about cannabis and all the benefits associated with the plant and derived products. And we believe we're on the right side of history here as we're making medicine and product available for customers and patients. And excited about it. This is a growing business. We think this is going to be a $100 billion U.S. business. Today, it's probably in the mid 20 billions. So you've got massive growth in the sector. And I would say as a shareholder, as I talk to our fellow shareholders here, I love what we're doing. I think, really from an operating perspective, the team is doing a great job. We're buying good businesses at good values and adding value to them. We see tremendous opportunity to really consolidate Colorado, that's going through a little bit of decline right now. We certainly had an influx of growing licenses and more product on the market that has pressured flower prices down. We benefit from that at retail tremendously, and with our growing capabilities, we can still, we're still making money at the levels where we're selling product to the wholesale market. So we think we're in great shape. The business has been de-risked, and we're finding a lot of opportunities to buy additional businesses for very good values, and finding new retail locations and launching new products. So I would tell you, this is a great time for investors to come into the stock or stay in the stock. I really see nothing but really a lot of upside, and we grow our revenue and grow EBITDA, and I think the multiples over time will continue to grow. And I think we're going to continue to do that until we get a catalyst such as safe banking that I think will certainly unlock a re-rate, meaning multiples will expand, stock prices will go up, as well as where we'll get some help from the federal government on descheduling and having some semblance of some infrastructure around the states being able to make their decisions to permit recreational medical cannabis in their state. the sector is growing employment and creating great jobs and creating careers for people that have not always had opportunities, and we think that's great and making a difference in those communities. So we think we're positioned well. We're going to continue to work really hard at taking care of customers, launching new products, growing retail opportunities and stores in both Colorado and New Mexico, and continue to grow in a responsible way as we steer our capital to things that generate free cash flow and make sense. So with that, that's Nancy and my prepared remarks, and now we're happy to take some questions.
Thank you, Justin and Nancy, for that informative presentation. As mentioned at the top of the presentation, I am Joe Gomes, the Noble Capital Senior Analyst who covers Schwazze. Here are the questions I've selected from the audience, as well as a few of my own. So Justin, we're going to throw you right into the deep end. First question coming on the board. It's a two-part question. With cannabis stocks at 52-week lows across the board, does that hinder any future acquisitions that you guys were planning on doing? And would a larger acquisition, perhaps of even a publicly listed company, be possible with market caps so low?
I think it's great. That is a great question. We could probably spend an hour talking about that. If you really look at what's happened, it's the operating performance of most of the businesses in cannabis. They haven't met expectations, but I would argue that the fundamentals are still there. We're converting illegal demand into legal demand. I think this is a terrific sector to invest in. I would tell you, we're in a spot right now where equity markets and debt markets for cannabis are dried up. Very few deals are getting done, and it's very difficult raising debt or equity today. Fortunately for us, we don't need to do either. And we've got cash on the balance sheet, and we've got, we think, a very good currency in our stock, and we want to make sure we manage dilution, but we're in a great shape to capitalize, to partner with really good businesses and acquire them and bring them into the fold and do that. So we think we're really well positioned, and with our focus of continuing to be number one in New Mexico and continue number one position in Colorado. We're not number one today in New Mexico, but we certainly have aspirations to do that. So we think, with our management team has been through a number of cycles in other industries. We know what we need to do to make sure we continue to drive free cash flow and being very efficient on expenses and continuing to grow and do good deals and take care of customers. So having said all that, we think the environment, I think for kind of smaller deals, I think we're seeing that's a very good opportunity for us. Bigger deals where you need to go raise cash, those are going to be difficult in this environment.
Okay, thanks for that. So since you mentioned dilution, there's a couple other questions here. I'm going to combine two of them here. One is, can you speak on your debt levels as well as plans for consolidating or increasing these? And then kind of the follow-up along with that is that the company's issued many shares to pay for acquisitions and taken on a lot of debt. Do you think this has created a lot of pressure on the stock and taken it down, partly due to the potential for heavy dilution?
I think, let me take those in pieces, and then I'll have Nancy talk a little bit. Our debt load is very manageable. We can service the debt and continue to drive, on an annual basis, still drive free cash flow after everything, and still invest in the business. So the debt, I feel really good about our debt. I think our cost of debt versus what's available today is in pretty good shape. We're of course going to continue to look at lowering our cost of capital for the entire capital stack. So I don't think that's really come into play. We're going to continue to do what we're doing, but in terms of what's happened with the share price, if you look at a 1 year and what's happened for the full year, we've held up. There's very few, if any, that have held up as strongly as we have. from a percentage basis standpoint. Now, we're not happy with being down, but we've held in there. The operations are continue to perform at a very high level. And we think as people come back into and bring new capital into the sector that we're going to be attractive because we are a safe bet. We're undervalued. We're growing. And I think our strategy is intact, and we'll see that. And I think the sector's been hit, and I think our small float really affects us, and that's why we haven't seen more stock appreciation. So for us, it's a very simple thing: continue to operate, continue to focus on growth and profitability, and generating free cash flow, and continue to simplify the balance sheet. And we think we'll get rewarded for doing that.
Great. So let's talk about the business a little bit. You mentioned the oversupply in Colorado, which has caused some pricing pressures. What do you think needs to happen, or when do you see growth returning, especially to the Colorado market post the COVID levels that were driven due to COVID?
Yeah, let me make a couple of comments. So if you look at it on a 2-year stack comp, so if you look at stores for 2020 and 2021, we are still growing versus that 2020 baseline, which is, I think, you had a lot of demand during COVID in 2020, and the fact that we are positive on a 2-year basis, I think, speaks volumes. I know there's a number of other operators that aren't, and we've continued to outpace the Colorado market roughly 10% in terms of growth. And what we're seeing in the market, I think you're seeing supply getting gobbled up and going through the supply chain, and I think we'll get through that. We're seeing a number of operators who are going out of business, who can't continue to. They're not making money with their cost structure. That's not the case for us. We are making money, and we can weather whatever storm is out there. We really believe we worked hard on doing that. And so I think you're going to see pricing start to creep up. I wouldn't be. I'm definitely bullish next year in Colorado. I think we'll have better comps, easing comps back half of the year, but we've really got to see what's happening with bulk flower pricing. I mean, clearly, if you looked at a year ago, it was somewhere around 1,000 to 1,100 roughly, and today it's in Colorado, it's probably 650 to 700. So you look at that, there's a lot of pressure there. So I think we'll get through the supply, and things we'll get back to equilibrium next year, and I think we'll continue to run our playbook.
Now you mentioned 33 dispensaries today. Kind of what's the goal for Colorado and New Mexico in terms of the number of dispensaries you're thinking you can grow to, and where kind of the geographies in each of the states are you looking to expand into?
Yeah, let's take. I mean, I think we could have easily 100 stores. It depends on location and finding the right opportunities, the right real estate. But I think certainly we have an opportunity to continue to grow in Denver and to continue to find neighborhoods where we're not today to service those neighborhoods and customers. So I think there's opportunities there. I think certainly to the northwestern slope are big opportunities for us. So I would say there's, we're going to continue to see Lakewoods of the world and, new places coming online with recreational, and we should be able to take advantage and get some new locations there as well. And then in New Mexico, we've got lots of opportunity in Albuquerque, which is the largest market, and all the way up to Santa Fe and heading south towards the Texas wall down by, on the El Paso border, and, to really capitalize on the tourism business from Texas and New Mexico. So, I think in New Mexico, we certainly, we're not committing to that, but we could have, probably 30 to 50 stores in New Mexico over time. And I'm not going to be forced into opening that many. We're going to take them one by one and make sure they're great locations, and that we can service our patients and customers there.
Okay. Now you mentioned the grow operations and the expansion going on there. What kind of percent of the products that you will have in your dispensaries do you think can come from your own grows? You mentioned that you got 60 SKUs of flower in some of the dispensaries. How much of that do you think can you supply from your own growing operations?
Joe, I think it's going to be, target, call it circa 50%. I think it's going to be 30 to 50% of our own flower needs. And I think we'll settle into our own products probably in the 30% range. We want to continue to partner with suppliers out there and provide really great variety and new products, new strains, new genetics with our customers. And we think we do that by partnering with leading growers and leading CPG companies, both in Colorado and New Mexico. But we certainly see an opportunity in places to serve the customer with new products and brands that we think are exciting and will be different, whether it's on a value basis or on a quality basis or with minor cannabinoids. We see a lot of opportunity. And of course, you get to benefit from some of the margin pickup with being vertically integrated. There's just a little more margin available to you when you sell your own products.
And then just remember that in New Mexico, we're much more vertically integrated than we are in Colorado. So Colorado has very little vertical integration today, and we're moving towards that 50%. In New Mexico, we'll actually be going in the opposite direction. As CPG products and third-party products become available there, we'll buy more of those products and add them to our portfolio.
Yeah, well said. In New Mexico, we're much more vertically integrated. Colorado, we're growing in our own products. We're becoming more vertically integrated. But I think we're gonna balance that and take it, and certainly partner with the best brands and the highest quality. And some of that'll come from us, and most of it's going to come from third parties that are really elite at what they do.
Okay. And speaking of partnerships, you mentioned Lowell Farms in your presentation. I was wondering if you could give us a little more detail about how that came about. Where are we in the rollout for Lowell Farms? Is that just Colorado? Do you also have an opportunity to do that in New Mexico also?
We do. So it's Colorado and New Mexico. Lowell Farms is one of the really great brands out of California. It's got a leading position in California on the pre-roll side. And we really respected what they did, their commitment to quality, and we're proud to be aligned with them. So we will sell their products and offer those products in Colorado and New Mexico. And that there will be more of those types of collaborations, but this one fit really, really well. And we had an opportunity, I think, really to knock it out of the park on the pre-roll side with a terrific brand that we can accelerate growth with. So, we have shared philosophies, and I think their team's done a nice job at really committing to quality, and we're excited about where this is going. And most of that's going to happen next year.
Okay. One of the things that you talked about in the conference call is driving traffic into the dispensaries. I was just wondering, maybe you can give us some of the plan of how you're going about driving traffic into the stores.
Yeah, I think one is being really consistent with what we stand for at STARBUDS, what we stand for at Emerald Fields, and what we stand for at Our Greenleaf, which is great service, broad assortment, in stock position, highest quality products. So we've been able to do a good job with just standing for those things and really committing to them. And other things that we're doing is we're doing a lot of A/B testing with various promotions, month-long promotions versus daily promotions, and really trying to help our customer through this. This is sort of an interesting economic period for us with inflation, but yet the job market is still really strong. So, and obviously fuel prices weigh on everybody. I mean, $6 a gallon is of gas on the coast is something that is material, and certainly folks, weekly food bills are going up at grocery stores, and so we're going to continue to look at helping our patients and customers with really great promotions and taking care of them, and continue to bring that quality. And we really think the sector and the category cannabis is going to hold up pretty well in really any environment. It's an essential category. It's enjoyed and it's used on a medical basis in good times and bad times, and we're committed to that. So really driving traffic, taking care of customers, new products, exciting promotions is really what we're working on.
No, I think you kind of answered a lot of this question, but I'm going to ask it anyways. You talk about deploying the grocery retail playbook, and I was wondering if you might be able to expand on that a little bit more. Give us some specifics of what you're doing and how that is benefiting the company.
Yeah, I think obviously, you want to think about, you start with the customer. So we think about the medical patient as well as the recreational customer and how they're shopping. What are they shopping for? What's the voice of the customers? Quality, pricing, value, size, THC content, flavor, terpenes, live resin and rosin versus regular THC distillate, et cetera. So really looking at that, that's really where you got to start. And then I think in continue to look at, product development and, driving that through the supply chain. So, we're certainly working on that. I don't know if you have anything else to add.
No, well, labor as well, making sure our labor is, tight to what the data suggests we need in terms of, meeting customer demands, yet not over labor in the stores. So, we use it in any number of places to make sure that we're meeting customer demands, but our costs are efficient as well.
And, I think you start with the customer and you start with products and driving that through the system. That's the listening to the customer. That's really the hallmark of what we do. And as Nancy said, obviously you schedule the right labor model and have the right folks on the floor taking care of customers. And, I think putting our merchandising, looking at categories, what's selling and what's not. So, I think just in a structured, systematic way of doing that without sharing all the secret sauce and how to promote and how to manage margins, all that stuff matters.
So a lot of data analytics. We'll call you the Moneyball of the cannabis industry. How's that sound?
I'd be honored if you called us that. But in all seriousness, we have invested a lot in our data team and really being able to looking at promotions and looking at operations, and there's always tomorrow. You could always get better. So we've dedicated a lot. We've invested in it. I think that's a differentiator for us as we talk to vendors. They're telling us that. So our suppliers are saying the amount of granular information detail that we're analyzing and bringing real insights to, like, don't run this promotion because you're not going to grow the category and you're not going to really take care of the customer. So, I think having those help, and we've been told that repeatedly.
So let's finish up on this one, Justin, because I know it's near and dear to your heart. Schwazze Biosciences. The cannabis plant has over 400 chemical entities in it, 60 cannabinoid compounds. What can you tell us is going on the biosciences front, and what should we be looking forward to going into the future?
That's our innovation lab, and it's really our skunk works. So we've managed, obviously you put a budget to it and you manage to that with some desired outcomes. It is an it's an applied innovation center, meaning we want to go try find products, solutions, new cannabinoids to treat various states, whether it be pain, anxiety, weight loss, et cetera. And really, we've got a really great group there, but their job is to go do a lot of work around some of the minor cannabinoids in discovery, and then what are things that we can bring via product with our CPG partners, as well as through our retail chain to bring consumer and patients new products that are more effective. So we're doing a bunch of that work. I expect to have new products that are generated out of that, and more to come.
Look forward to seeing how that all plays out. Well, Justin and Nancy, that's all the time we have for today. Thank you for helping us get a better understanding of the Schwazze story. If you'd like to get the independent research I've written on Schwazze, go to channelcheck.com and type in the company name or the ticker SHWZ.
Thank you for joining us for this virtual roadshow presentation brought to you by Channel Check. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.